Welcome, ladies and gentlemen, here now in Zurich Commodity TV for you at the Zurich Invest offices. And we want to talk now to a fabulous gold producer, OceanaGold. And Mick Wilkes is here, the CEO of the company. Good morning. Welcome.
Good morning. Thank you. Thank you very much.
You are, one of the top gold producers, I would call it, dividend payer, and it looks like a record year last year. Maybe you want to comment on that?
Yeah, look, we had a fantastic year in 2017 with record profits, $172 million profit in 2017. Record EBITDA over $400 million. Gold production of 575,000 ounces and 18,000 tonnes of copper. So we're really profiting from our investments in the Philippines, in New Zealand, and also now in the USA. And so we've got a very strong business. We've got a strong balance sheet. We paid off another $85 million of debt last year. We paid a dividend again last year, so we're in very good shape going forward.
Yeah, fantastic. So maybe dividend, that's one of the key things, I think, for the future. What's the future policy? Do you have it like on a straight formula, or you decide whether to pay the dividend, what the business model is then like?
Yeah, so our dividend policy at the moment is a 2-cent dividend plus a discretionary component, depending on the gold price, depending on our forecast looking forward for cash flow from the business, and we use a 5-year planning cycle. Of course, we want to continue to grow the business and make it more profitable and more successful so we can grow the dividend, and that's our long-term objective.
And that's what your shareholders love to hear.
Yeah.
For sure. Can you maybe comment a little bit on, let's say, average mine lives, on average AISC in the group?
Well, we've got 4 mines, and 2 of those mines have a mine life going out past 2030. So the Hale Gold Mine in South Carolina has an 18-year mine life. The Didipio mine in the Philippines has a 14-year mine life still. And we're working hard on extending the mine life at Waihi in the North Island of New Zealand. We're currently spending about $40 million on exploration and development, and have just put in an application for a 10-year mine life extension of that operation, which produces around about 100,000 ounces a year. But importantly, it's very low cost. It's $750 per ounce. So it generates...
That's all-in cost?
All-in sustained costs, including exploration costs, is about $750 per ounce. It's got a plant that's underutilised. It's got a fabulous gold inventory, and it generates about $50 million a year for us in cash flows. Yeah. So a 10-year extension of that operation will be really good news for our shareholders.
Definitely, and for the company, of course. As you said, I like that you paid back $85 million in debt. So what's the debt situation of the whole company?
Yeah. So
and what is it maybe to factor to EBITDA or stuff like that?
Yeah. We currently have about $250 million of debt and about $80 to $90 million of cash. So we're paying off that debt on a regular schedule, and we can pay it off by the end of next year if we wish to. So that puts us in a very strong position going forward for any further growth opportunities.
Great. But what are you paying for the debt? What is the interest?
Oh, it's pretty low. I can't disclose the commercial terms of it, but it's a straight corporate facility with very low covenants. It's with a syndicate of banks, internationally known banks, French, European, US, Canadian and Australian. Because it's a low covenant debt, it's got a very low interest rate. So it's around about 2 to 3%.
Okay, so that's really cheap,
Yeah.
And I like the fact that you can pay that off very fast, because I think in times like this we are living now in, it's always important that you cannot be pressurized from anybody.
That's right, yes, and we are price takers, so we can't guarantee the price of our product. We have to run a lean, efficient operation and make good margins, and carry a relatively low debt level.
Yeah. Perfect. Margins. Let's talk about guidance for 2018. What's the game plan in the company?
So this year we've got a production guidance of 480 to 530,000 ounces, and all-in sustaining cost is 725 to 775. The guidance is lower this year because we're going through a transition period at Didipio, where we've shut the open pit mine down because it's finished, and we're starting up the underground mine. And the underground mine is ramping up, and as it reaches full production, we'll be back to our normal 120,000 ounce per annum run rate. So that's why this year's 480 to 530, so around that 500,000 ounce mark. But it's still very solid earnings, very solid cash flows, and not just for this year, but for the 5 years to come at least.
Let's talk a little bit more longer term. From where do you see future growth coming for the company?
We're investing a lot in exploration. We are now doing exploration in the southern part of Argentina. We've got strategic investments in Nevada. We've got some excellent exploration ground in New Zealand and in around Waihi. So we're putting a lot of focus on exploration. There are, the exploration companies, the juniors, are struggling for finance at the moment. So corporates like us that have cash have the opportunity to fund some of those at a relatively cheap price. So it's a good time.
Or just buy the company.
Well, we all things are considered, but we are investing heavily in exploration.
Great. Where do you see Oceana in 5 years?
I'd like to double the company, double the dividend, double the profits, double the production.
Okay.
Yeah.
Oh, fantastic. That sounds great. Overall spoken, let's move a bit to the gold market. As you are a gold producer, so you have always, I would hear one ear on the street. What's going on? Where do you see the gold market now?
The gold market is, relatively buoyant. I think 1350 is not a bad price, but it does feel like it's continuing to rise. I think we saw the bottom of the gold market in 2015, and it's been steadily rising at a healthy rate since then. And there's more pressure pushing it up than there is pushing it down. So I think the gold is in for a very good run over the next 5 years.
What prices could you imagine? What do you have in your mind?
Well, it's 1500 is not far away. 16 and 1700 are not far behind that. So I won't call $2,000 gold, but I think a buoyant, steadily rising gold price is what you should expect over the next 5 years. Yeah,
which would be anyway phenomenal for you guys, because with that low AISC, you make even more money.
That's right, and the time is right to be putting more ounces in the portfolio, so for future benefit.
Definitely. Super. Thank you very much.
Thank you very much for the
great interview. I like it. I mean, you're fully on track, fully in good shape. That's how it should be.
Great.
Thank you.
Thanks for the opportunity.
Yeah, ladies and gentlemen, that was Mick Wilkes, the CEO of OceanaGold. And yeah, you heard it. Around 500,000 ounces of gold are planned this year to produce with AIC between 725 and 775 per ounce. I think this is a really healthy number here. And as Mick said it, I mean, last year was a real record year again for the company. They paid dividends. That's also very important for shareholders, because shareholders should be always rewarded and not forgotten. And he has a straightforward plan, I would say. As he said, he wants to double the company within the next 5 years. That's a big statement, a great statement, and that's how it should be. And the gold cycle is on. So check out the company, definitely. Thanks for watching us. Bye-bye from Zurich.